Well, hello and welcome to the first trading day of this week. It's going to be an interesting one as global and local markets, they're basking in the bullish euphoria from last week. Let's see if that continues. Let's get to the top stories I set to agenda now, starting with oil prices. Talking about basking in euphoria there, we're seeing oil up big this morning, $2, up more than $2 in early Asian trade today after the U.S. and China said they would ease some of their tariff measures, lifting market sentiment, and that's for the two largest crude users. And, you know, they've been moving forward, and we're seeing positive reports, you know, so far with that 90-day pause there, $65 there, Brent, you know, jumping big this morning, 2.19%. WTI crude, not left out, a bigger jump, 2.34%, $62.50 per barrel. Note both benchmarks for the week, last week, they were up over 5%. So it's been a stellar performance there with the bulls looking quite in control in this oil market. But would that continue? Are we going back to the $70 range? We'll definitely find out. Meanwhile, domestic crude oil output rose to a two-month high. That's in Nigeria, 1.48 million barrels per day last month, and that's according to latest report from the Nigerian Upstream Petroleum Regulatory Commission. Data from the petroleum industry regulator shows that the figure, which is higher, about 85,000 barrels higher from the 1.4 million barrels per day recorded in March, but still falls short of the 1.5 million barrels per day official quota set by the Organization of the Petroleum Exporting Countries, that's OPEC, for the same period. According to the upstream regulator, Nigeria's total output in April reached 1.683 million barrels per day when it includes blended and unblended condensate. However, OPEC does not include condensates in its quotas for member states. Meanwhile, we have a report early this morning. Dangote Petroleum Refinery slashed the gantry price premium motor spirit, that's PMS, also known as petrol, to about 825 naira per litre, from 835 naira per litre. You know, as we see competition, you know, continues in that domestic market. We'll confirm that report later on and get you more details on that. To other stories now, the leasing industry in Nigeria experienced significant growth in 2024, expanding by 23.2%, as value of outstanding leases rose to 5.17 trillion naira, up from 4.19 trillion naira in 2023, according to Equipment Leasing Association of Nigeria. In a statement released yesterday, the association noted that new releases reached a record 973.3 billion naira during the year, reflecting the sector's continued resilience despite ongoing macroeconomic and global challenges. Elan data also revealed that the industry has contributed an estimated 24.6 trillion naira to the Nigerian economy over the past decade. So we'll definitely keep bringing more details. But right about now, for our viewers on DSTV, we're going to be joining a live coverage there and the FCT Media Parley there at the Honorable Minister's Residence Live Camp Abuja. But you can watch Business Morning on other platforms and continue the conversations right here as we track what's going on with the market. Also, the National Identity Management Commission has announced a hike in fees for modifying personal data on the National Identification Number, that's NIN database, with a cost of correction, maybe correcting a date of birth. That's now 28,000 naira, up 75% from the previous 16,340 naira. According to NIMSI's updated price list, changes to other personal details such as name or address will now cost about 2,000 naira per request, a 31% increase from the former 1,522 naira. While initial NIN enrollment and first slip issuance remain free, several other services, including slip reissuance and premium enrollment, have seen notable price increases both locally and for Nigerians in diaspora. All right, so also the Africa CEO Forum 2025, that kicked off in Abidjan today. Over 2,000 CEOs, investors, heads of states and policymakers, they convened to chart a bold new course for Africa's economic future. Our very own John McQuarrie is there to bring us reports as they develop. We'll get more updates from her later on at 1 p.m. and maybe at 11 a.m. Business News. So she's right there. She'll give us all the information that we need as the CEOs and business leaders convene right there in Abidjan. We'll take a break now. When we come back, what's happening with data usage in Nigeria? That's our next conversation. Just stay with us. All right, now to our first conversation. Data from the Nigerian Communications Commission, that's the NCC, shows that data usage dipped at a record 1 million terabytes in January to 893,000 terabytes in February. Picked up again in March, reaching about 995,876 terabytes. So we've seen some kind of change there. Normally, there's a peak in March that trumps what we see in January, but the data has not seen that happen again as it did in 2024. Is it because of the price hike? Some analysts have said it's because of that. So definitely when price goes up, usage or consumption kind of finds its way down. All right, let's talk to Aisha Abdulaziz, our guest this morning. She's a CEO, Legend Internet PLC, joining me from our Abuja studio. Great to have you. Good morning.
Good morning.
So first of all, congratulations. You're the new kid on the block talking about the latest listings on the NGX. And, some would say, Legend Internet PLC, came from nowhere and they're listed on the stock exchange. Is that the case?
So thank you, Williams, for the question. I will say that is not the case. Legend has been in Abuja for 3 years. Definitely, we're not national. And one of the reasons we've gone to the capital market is to become national. So while we're not new, we are coming out to the nation now.
All right, so definitely congratulations again, and we know you've been in business for a while now. So let's get to the issues on ground now. We're seeing that data from the first quarter, and that's when we had the providers had the go ahead to raise tariffs, and we've seen that implemented, but usage dropped, from January into March, even though normally March we see some kind of uptick that kind of trumps what we had in January, but that's not the case now. But how would you assess the current state of internet penetration in Nigeria, and what are the key factors driving or limiting growth?
Right. So I view internet penetration in Nigeria in two perspectives. One is obviously the mobile penetration. I think mobile penetration is extremely high. Nigeria is leading Africa at the moment in terms of mobile penetration, and mobile players have done really well in ensuring this penetration. Then you now have true broadband penetration, which is where we now have a lower penetration in the market. And as you earlier saw in the statistics, mobile data, it's limited. There's a limit to how much you can consume when you're on the move. However, true broadband is also unlimited, which is where we are trying to push the focus and push the Nigerian market into. So that's why you see data usage with the increase in prices currently going on with the mobile players and other players in the industry. You're going to see a lot less people managing their money and their data usage. But with true broadband, that is not really a concern. For us at Legend, we're not increasing our prices. We're sticking to our current prices, and our products are unlimited internet. So one of the key drivers of internet growth are two major things. One is technology advancement. Technology advancements like AI, machine learning, automation applications that you have online. They need internet or bandwidth to provide those services. Then you now have consumer behavior on the other hand, which is also led by technology advancements. So consumer behavior drives internet usage. For you to access any of the applications that is being provided, you need internet. Whether it's social media you're accessing, whether it's your phone app, bank app that you're accessing, all of them drive consumer growth for internet. Then you also have, obviously, one of the major factors limiting internet growth is also infrastructure, internet infrastructure in the country. We have very good infrastructure in terms of submarine cables and also national fiber. That's domestic fiber. On the other hand, the metro and last mile, which delivers the internet to the consumers, there's a low penetration there. And this is where Legend Internet is trying to, increase in the market.
Yeah, I guess a lot has to be done when it comes to, infrastructure, maintenance and all of that, and investment, most especially. But, we've heard, internet access, directly, contributes to, the GDP and overall economic development in most economies. So when you have a case where, internet gets more expensive, and, we don't know if this is the last hike, or maybe there'll be more hikes, going forward when it comes to prices. Do you think prices will keep going up, and, definitely that might turn into a negative, for economic development in Nigeria?
So I think prices, it's a factor of multiple things, obviously. Well, for the telecoms industry, we're heavily regulated in terms of prices. I think this is our first price increase in 13 years that has been approved. And in 13 years, if you look at the economy, a lot of changes, a lot of even the devaluation, inflation that has happened in the country in the last 13 years. So for that, definitely you're going to see a lot of increase. But in terms of growth, internet has come to stay. It's no longer a luxury. It's almost a right in every part of the world actually now, because everything we do requires internet, whether it's education, whether it's learning, working, anything. So internet is driving digital economy as we speak now. So everything we do, so definitely we're going to see an increase in internet usage going forward.
All right, so looking
and that
at
will have an impact in the GDP.
Right, looking at internet usage, we've seen some households switch to more like fiber internet service providers, and with the fiber, we noticed that most of the time your internet usage or your data, it mostly gets you to the end of the month, unlike when you're using other service providers that's not fiber, that could end before your subscription could be over, before the end of the month. So what is it about fiber that allows your internet usage gets you to the end of the month, unlike other service providers?
It's capacity. So a lot of the reason why fiber broadband is preferred is because it's unlimited. You have that capacity that you have it anywhere directly inside your house. So it's built into the home. On the mobile side, you have maybe towers and whatnot that have a certain capacity they can take, and that's shared between multiple people. So you cannot have, so you have now data restrictions on there. But if you're using fiber, there's no data restriction. It's unlimited internet. So unlimited, all you're doing is just paying for the month, and you can use as much internet as you want. You can use 20 terabytes if you can, and you can use 1 terabyte, 100 gig. So it's up to you to utilize what you want to utilize when you're on fiber.
Right, and do you think, maybe fiber, could get cheaper, going forward, or is that too much to expect?
It's not too much to expect, but definitely at the moment, fiber is reasonably priced. I think all providers like from us, we start from 21,000 and goes upward monthly. And if you're getting unlimited internet for those type of prices, I believe if you look at it, it's like maybe $13, $15 a month. Eventually, the economy, and that's actually very cheap internet. So it's not terribly expensive. And we expect to see as time goes on with efficiency and whatnot, we at Legend, we want to maintain our prices. We're not going to increase our prices because we understand the need for more consumers and more Nigerians to utilize the service.
All right, talking about urban and rural areas, definitely we know the urban side of things, gets most of the services, easier than the rural areas. So talk to me about bridging that digital divide, between the urban and rural areas. Are you seeing any growth, in that segment?
Okay. So on the urban side, you have to understand, obviously, a lot of investors would prefer to go into urban areas because you get returns from urban areas. On the rural side, we will need policies, right? Government policies to help bridge that divide because what you have is that the rural areas do not have as much spending power as the urban areas. So for any investor, when they go into the market, they're trying to make a return. And so if you go into a rural area where your returns are lower, you would need an incentive to move into those locations. So what you have is policies, whether it's on the corporate side. So for us, like we do CSR, we provide free Wi-Fi at hotspot locations. We look at high traffic locations around town, and we provide free internet for a certain time to all consumers in those locations. So when you have corporate policies and also government policies that come together, that will be used to bridge that divide.
All right, so talking about profitability, definitely if you're going to make profit in a rural area, I guess you'd drive investment there. But generally, how would you describe profitability for your industry, and doing business in Nigeria compared to other climes?
So profitability is long term. Definitely for anybody in our industry is long term because it's capital intensive. You're going to be spending a lot of capital on infrastructure and other stuff. And it's tough, but you also have costs that you're not, when you go into the business, it's not made abundantly clear. Things like, you come up with like TV license, some municipal permits that you're not aware of. All those things come into play. But with efficiency, with drive, eventually in the long term, you're going to overcome and you're going to be profitable.
And talking about infrastructural, challenges, faced in Nigeria, how do you think, public-private partnerships can help, in overcoming, most of these challenges in Nigeria? Okay.
So one of our major challenges in Nigeria is the security and safety of the infrastructure, right? And for us, and it goes beyond actually theft and vandalization. It goes also into the mindset, the awareness of the people of that infrastructure. For example, now, if electricity, everyone is aware of electricity. If your power goes out, you know the impact of power going out, right? You know that this has happened. So the same kind of learning, the same kind of awareness needs to be done for telecom infrastructure, especially fiber infrastructure. So the people also need to become aware. So one of the things we've also done is we will commend the local law enforcement whenever there are, damages, they do respond when we call upon them. And even some of our customers, when they notice that there's maybe construction going on, they do reach out. They say, this is going on here. So more of that awareness, more of people coming together to see that, this infrastructure is what is going to affect your communication and your internet at the end of the day. And keeping an eye on that, it's a huge step.
Right, and we have some, satellite internet service providers that actually operates in Nigeria. So, talk to me about, chatter in your industry. Do you sometimes get afraid, of international competition, as we see it in the country. We're seeing most of them even operate in most parts of Africa too.
Yes. So each technology has its pros and cons, whether it's the fiber, whether it's the satellite, and each, for example, like we said, fiber infrastructure vandalization is a huge issue for it. You look at what's it called, satellite infrastructure, weather is a huge issue for it. Nigeria and the weather, half of the year we have rainy season. That's going to affect, what's it called, usage and quality of service. So I think there's room to play. Penetration of fiber and even broadband itself in Nigeria is extremely low, and the better quality, because at the end of the day, competition makes you better. So we welcome it.
All right,
to show
definitely. We do love, as consumers, we love competition, because somehow, that could give us, better prices going forward. But, going forward, in the country and this industry, what would you like to see, from the government side of things, to help, boost, quality of service, how you do business and, profitability going forward?
Okay. So the NCC has been working very, very hard lately. I know they've been working together with the federal government to look into some tax reforms and some policies along the way. So they're looking at making sure federal taxes are not also, repeated again on the state levels. So that's going a long way to help. And I'm very sure that, they have it, covered to deliver on what is required. For example, last year, they signed the CNI Act, which made telecom infrastructure critical network assets, giving us protection of our infrastructure. Even legally, we can now have recourse to take when there's damages, which wasn't available to us a few years ago.
All right, definitely, and we'll see how growth continues so far, and how we have that handshake between the government and private sector, because we all rely on internet. Even I'm relying on internet right now, having this conversation with you. But thank you so much for coming on today. That was Aisha Abdulaziz, CEO, Legend Internet PLC. Thank you for coming on the show today.
Thank you very much for having me.
All right, still ahead on Business Morning, we discuss expectations for investor sentiment this week as we brace for April inflation data. That's coming up midweek. Just stay with us. Welcome back. Well, Nigeria's economic landscape in 2025 remains fraught with challenges as inflation, exchange rate volatility, tight monetary policy continue to shape the country's macroeconomic stability. Let's get a sense of what to expect, as we brace for economic data coming up this week. Let's talk to Arnold Dublin Green. He's the Chief Investment Officer at Codrus. Join me right here in the studio. It's great to have you.
Thanks for having me.
Yeah, I'm sorry. I keep making that joke every time. We don't have drinks.
I was about to ask what joke is it?
I know, yeah. But
yes, you do.
It's that time again. Everyone's going to be reporting inflation numbers, and from locally, internationally. We're all bracing, for that. But bringing it down to Nigeria.
Okay.
Expecting that data sometime in maybe Wednesday or Thursday this week.
The 15th it should
15th, yeah. So what are you seeing, for the April numbers? It's rebased at this point.
Yes.
But we're tracking that.
Yes, of course. I think, first of all, with the rebase has brought a lot of noise, and it's just hard for everyone to quiet the noise and just understand what it means. Without the rebase, regardless, we think that a year-on-year inflation is softer Q2 2025 and Q2 2024 without the rebase. Obviously, with the rebase, it is softer because of the rebase. But anyway, going through the year, we still think that April inflation is still sticky. We saw a dip in inflation in February, and it started to pick up again in March. We think that we still see high input costs in April, play out through April. we saw depreciation of the naira due to all the geopolitical issues and Liberation Day and everything else. And you can't deny the impact of a weaker naira on our inflation numbers. So we see higher input costs, lower naira to dollar or depreciation of naira to give in April a pretty sticky inflation.
Yeah, I've talked about inflation so much, at this point.
Yes.
It's just hard to think about anything else, at this point. Because, yesterday I was at pharmacy, trying to buy, something, and, they were attending to a lady in front of me. And when I told her the price of what she was buying, she said, for this small thing, over 20,000 naira. So that seems to be, the vibe.
Yeah, I mean, unfortunately, it's what we have.
When you go to the stores, they're still so high.
Yeah. I mean, and it's going to be like that for the rest of the year. I mean, maybe inflation probably cools off as the year ends, but we still think Q2 inflation stays high. That's all I can say. Inflation stays high. On a month-on-month, maybe it might get softer as the second half approaches, but for this quarter, especially for this month, probably see a slight uptick in inflation. Food inflation also plays a huge impact on the inflation basket as well. So so that should cause a slight uptick in inflation numbers. And so it stays tough.
Yeah, and going by what we saw the stock market last week.
Okay.
Quite the run.
Yeah.
The bulls were firmly in control last week, and I'm wondering if that will continue into this week. But who's beating inflation right now in Nigeria, in your opinion?
As in what sectors beating inflation? Or
sectors, whatever you're investing in, asset classes, performance.
So specifically today, everyone's waking up to a risk-on day. And what I mean by risk-on day is a day that everyone around the world is happy to take risks. I'm sure you saw China, US over the weekend sort of came to an agreement. We saw a huge risk-off play for most of the beginning of this quarter. When I say risk-off is, no one liked equities, no one liked anything with risk. Right. So I think this week we'll probably see more firmer prices across. So your usual banks, I've always loved the palm oil names, right? So your Presco, your Como, and those names have always been good in a weaker naira environment. So where we know that because of geopolitical tension is causing lower oil prices, which will affect the naira, which should cause a weaker naira, there are still some names and some sectors that still outperform or do well because they have a small export component to the revenue line. And so the aggregate names are always good. And they had some good results last week or the week before. So regardless, going through this week, because of the risk-on environments globally, which is good for equities, and then perhaps still the general softer naira environment, I like the aggregate names. Banking sector is good. So I think equities as a whole should be firmer this week.
Right. And it was quite good. Last week seeing the likes of Beta Glass. That's one's just been running.
Beta Glass is something everyone's
talking about. Running.
And a stock like Beta Glass is a story to the Nigerian consumer that regardless of what we're going through, the consumer is still strong. So it's a testament to that.
Right. Some will say they feel really weak.
Yes, of course, but we still spend. So on the revenue side, you have your Guinness, your consumer names on the top line, right? Because what's top line? Revenue is price times volume. So price times volume, so regardless of the price going up, the volume is still going up because consumers are still buying. So on the revenue side, you said consumers, regardless of inflation, the consumer names and the consumer guys are still selling because consumers are still buying. Right. So there's some testament there.
All right. And talking about, some euphoria we've seen in the markets, from last week.
Okay.
Oil wasn't left out.
Yes.
Big jump there.
Yes.
Over 4% for the week.
Yes.
Last week. And we're kicking off, today.
Comfortable.
Quite strong. Over 2%. Rise for Brent and WTI. And that's our biggest foreign exchange earner. So is it better days coming?
So oil is a tricky one. Oil is a tricky one because we all started the year knowing that oil will end up softer because we had a general overview of a softer global consumer demand. So a global consumer demand is what drives oil prices in general, right? And this is global consumer demand. So we all knew that consumer demand would be slower this year. So we all thought, okay, oil will probably started off about $80 or so a barrel. We all knew maybe $70 a barrel was the outlook. But then, the tariffs kicked in. So the tariffs just made everyone realize, okay, this consumer demand is actually going to get weaker because tariffs are bad for consumers. So you had the tariffs kicking in, and then you also had a contraction in US Q1 GDP numbers that came out, which made everyone feel more uncomfortable. So generally, oil is one that's, I think the slight jump that you've seen in oil towards the end of last week and today is what we call a relief rally. Is when we know that oil has sold off a lot. Oil is weaker.
Is it a dead cat bounce?
or a dead cat bounce, right? So where it's sold off a lot. We're also expecting some more. We're expecting an unwind in the production cuts from Saudi Arabia. We're expecting some more. I think on the 3rd of May, the OPEC Plus countries announced that they're going to add another 411,000 barrels per day from June. So we know that there's going to be a huge or some inflow of oil production. So we're still expecting softer oil price. So today is just, fundamentals are weak, but it's sold off massively from, an average of $71 in March to an average of $66 in April. And we saw Brent touch $59.
Wow, so
right?
sharp.
Yeah, so I think it's just a relief rally where it's like, okay, we know it's weak, but it's too weak. So there's some opportunity to take there.
Right, and maybe we could get a positive week again this week.
To start of the week is
some
positive.
data coming up.
Yeah.
For I know in the U.S. What's maybe playing out with some of the stockpiles and all of that. We should get some data.
Yeah.
And that drives price.
Yeah.
So but could it be another positive week?
I understand as a Nigerian you want positive oil, but
so,
see the thing is, but the thing is, it's easy to call in the week. Easy-ish. I mean, because what we're seeing in oil really is just a relief of, okay, UK and China have come to a temporary deal, right? And we know that what's been driving the markets with capital flows has been, Trump. And because of the predictability of Trump,
right,
it's hard to call the market as it comes. What you can do right now is enjoy the rally that gives you oil in maybe at 65 or above 65 for a few days because of this temporary deal that they've hit.
Right, and we did see, weakness for the naira.
Yes.
Definitely, analysts have attributed, the drop in oil prices, to the weakness of the naira. We know we need that. We need oil, for most of the revenue coming in to the country. But should we say, we definitely expect a weaker naira if prices of oil stay low?
Yeah, so
going forward, or is it something else? So
Nigeria is an oil story, unfortunately for us, right? So oil accounts for 40% of our revenue between 2018 and 2023. Oil accounts for 56% of the budgeted revenue for 2025, and this is oil at $75 a barrel, right? When we saw the strengthening of the naira starting from Q4 to early this year, Q4 last year to early this year, a lot of it was foreign portfolio investors coming in simply because there was a belief that, okay, the reforms have kicked in, or the reforms are kicking in, and everything is going to be okay. And there was a view that the naira had sold off a bit too much, so the naira was undervalued. And with the reforms kicking, every global investors should get a better return on their capital. But what we've seen now, if your budget is at $75, right, and naira is at $65, a few things need to happen, right? So when we get the supplementary budget coming, naira needs to depreciate, right? Because if you're selling something in hard currency, and the price of that thing has gone down, and you can't increase the production of this thing, you actually have to reduce actually reduce the price at which you sell it in terms of your local currency. You have to depreciate it so you get more bang for your buck in that sense. So naira, in my view, naira stays weak or most probably gets weaker as oil gets weaker. And also we have to, push our oil production, and we have to reduce our capex now coming in, and we have to borrow more. But regardless, I think it'll be, if you model $65 of oil, $65 per barrel of oil against naira alone without anything else changing, you're probably going to get about 2,000 naira dollar or so, slightly over, right? So what we don't want to do is see naira get to 2,000.
We don't want to
social
see that.
issues.
No.
So what you might have to do is do all four, right? So you have to figure out how to boost your production, reduce your currency a little bit, or depreciate your currency a little bit, reduce your capex and borrow more. So just so you sort of get the budget that you want.
It's funny or strange that it's so hard for me to accept this rate.
Of course.
I don't know. It seems psychologically, my mind is trapped in about maybe 600 naira to the dollar. So it's hard.
Yes.
I'm sure it's hard for most people
yes,
too.
Of course. Yes.
To get used to these rates, and I guess that makes it harder for the central bank at this point, because they've been trying to defend the naira.
Of course, yes,
You know,
yes. And there's a lot of pressure, right? Because you're getting the foreign portfolio investors, the global market investors, the capital flows that came in due to the strength of what they saw with the reforms coming in, right? You're getting them now exit. Also because remember, they're taking losses on their global positions. So they also have to protect those the other global positions. And like I said, naira is an oil story. So you're holding naira, you're holding a bunch of other assets, and you're seeing oil go down from $75 to $65 or even $59 a barrel. And you know that this currency you're holding is very strong oil because 50% of the revenue for this currency is oil. So what do? You reduce your naira position. So it's only natural that we're seeing a weaker naira. It's only natural that we will continue to see a weaker naira if oil stays
talking about a weaker naira, we see the reserves. We had an uptick about 2 weeks now.
Okay.
That's for foreign reserves. Hopefully, we're hoping that continues because that gives the CBN firepower.
Of course,
to defend the naira. But if oil prices stay weak, then that even makes it harder. But it's good. We did see an uptick. But it's rate decision setting season that's coming up too.
Yes.
This month. What do you see? Another hold?
Yeah, I'm sorry, there's no rush.
Something else?
There's no rush. I know there's a lot of pressure from local businesses, there's a lot of pressure from so many of us to reduce interest rates, but there's no rush, especially with all the global political tension and the trade tariffs and Trump Liberation Day and oil and how that's affecting us. There's no, if I was the governor of the central bank, I wouldn't be in a hurry to go away from my hawkish stance. I'll most likely just keep everything on hold. Also, inflation. This CPI rebase has caused a lot of noise, and I'm pretty sure they're also trying to figure out what does it mean.
Right.
If you've rebased by how many basis points, what does it mean also for inflation? So there's so much confusion and so much dust that I expect the central bank to hold.
Yeah. I guess that's, it's just, it's a different scenario because in the U.S., we know President Trump has called Fed chair a lot of names.
Of course, yes.
So far, but we don't see that happening here.
Yeah.
The president's not that bullish about cutting rates.
Yes, of course.
Because at the end of the day, Trump says, everything is great. The U.S. economy, why aren't you cutting rates?
Yes.
At this point, but we do not see that even happening in the U.S. Fed chair is not going to cut rates.
No.
Same thing.
Same thing. It's so much going on, so much noise that central banks globally are trying to figure out, what does everything mean. You're seeing a shift in also structure. You're seeing a structural shift with a lot of global central banks buying gold in huge volumes, right? So there's so much going on globally that everyone's trying to figure out what this shift means and then how their decision affects this new.
Right, and we're seeing good news coming from U.S.-China talks. That's taking gold lower.
Yes, of course. Yes, of course.
At this point, but it seems $3,000 will remain.
Yeah.
For a while.
Yeah, I think so. I think gold, right? So going back to what I was talking about, a structural shift. From 2022, you had global central banks. Global central banks doubled the amount of gold they were purchasing annually. This was before, for many reasons, right? 2022, you had the Russia-Ukraine war, and everyone saw how the U.S. Placed sanctions on Russia, and I believe it made all the central banks frightened, all the countries frightened. So they had to sort of diversify from U.S. treasuries. Just for more stability. And so what you're seeing is you're going to continue to see this diversification of their reserve, of central bank reserve into gold. So regardless, the softness you're seeing in gold today or last week is just it's the dusts. Gold went up to $3,500 and back down to $3,200 or so, which, like I said, is normal. Globally, there's a bit of risk on because of today's news with US and China. So it's normal, but fundamentally gold still has the play. It's still a safe haven play. It's still it's still showing, it's still depicting. So
it's not like, we get peace and gold just crashes.
Not that I know of. Fundamentally, gold is still good.
Yeah,
gold is still good fundamentally.
Fantastic. Oh, it's great having this conversation with you. I've been talking to Arnold Dublin Green. He's the Chief Investment Officer at Codrus. Thank you so much for joining me.
Thank you for having me. Thank you.
All right, we'll take a quick break now. When we come back, find out what's playing out in the global markets. That's in a moment. Stay with us. All right, let's find out what's going to happen for the global economy this week. What investors should be looking out. Looking ahead, the economic calendar is packed. May 13, markets will focus on the NFIB Business Optimism Index, followed by inflation rates, API's weekly report on U.S. crude inventories. The MBA mortgage applications release, that's scheduled for, I think, May 14th, along with EIA's updates on oil stockpiles. May 15 brings a flurry of key data, including retail sales. We're getting retail sales. That April inflation, that's for Wednesday, that's for the U.S. Producer PPI, Producer Price Index, we'll get that on Thursday. Then retail sales, that's another data investors will be looking out for to find out the state of the U.S. consumer. So that will definitely drive sentiments in the market. The NAHB Housing Market Index and the latest initial jobless claims, I think that's coming up for May 16. Building permits and housing starts are due alongside import and export prices, preliminary Michigan consumer sentiment reading. So a lot for investors to look out for, and definitely we know markets will react to all of that. Also, we see Japanese Prime Minister Shigeru Ishiba stated today that Japan will not accept any trade agreement with the United States that fails to address the tariffs imposed on automobile imports. The U.S. has imposed about 25% tariff on imported automobiles, a move that has significantly impacted Japan, where vehicles account for the majority of their exports to the U.S. Chinese Consumer Price Index inflation, that eased for a third straight month in April, while producer inflation fell by its sharpest pace in 6 months as the country grappled with a bitter trade war with the United States. CPI inflation, that shrank by 0.1% year on year in April, according to government data over the weekend, in line with expectations. And after a 0.1% decline in the prior month, CPI rose by 0.1% month to month. Then Saudi Arabia Oil Company, that's also known as Saudi Aramco, said that its net profit for the first quarter, that fell to $26.01 billion, down from $27.27 billion in the previous year. Despite the drop, the figures exceeded analyst expectations of $25.745 billion, according to a poll by Visible Alpha. The oil giant attributed the decline in profits to weaker oil prices, which have been affected by global economic uncertainty, trade tensions, and the threat of oversupply as OPEC Plus ramps up production. Then we see President Donald Trump announce that he would sign an executive order today in the morning to slash U.S. prescription drug prices by aligning them with the lowest prices paid globally. Posting on Truth Social, Trump criticized pharmaceutical companies for decades of inflated pricing. He said the U.S. has long paid for more of prescription medicines than peer countries, with some treatment costing 5 to 10 times more, despite being manufactured by the same company in the same facility. So we'll be looking out for that, definitely. All right, to our conversation now, conciliatory tone at the U.S.-China trade talks this weekend. We got that report today, 90-day pause, and definitely negotiations are looking quite good, according to those that were present, with those negotiations. Let's talk to Isaac Marshall now. He's an investor at TLG Capital. Hello, Isaac.
How's it going, man?
Fantastic.
Great to see you again.
It's great to see you too, Isaac. So, yeah, we did get that breaking news this morning. We have an agreement at this point between the U.S. and China. They've agreed to pause for about 90 days, this trade war. But is this what we're looking for? Because we kept hearing, from the U.S. that it's productive. The meetings are so productive. It's good. It's looking good between U.S. and China. How are you seeing it?
I think it's funny because with at least an eye of the storm that we've entered in, the eye of a hurricane is the part of the hurricane where there's total calm even though there's storm all around it. And I think to some degree that's where we've landed. And I think it's a useful reminder to myself as well as other investors that I think to some degree those who chose to look through the tumult and the noise, watch the fundamentals, and heck, even pick up the companies that they've been looking at for some time when they sold off and became quite cheap. At least so far, seem to be those who've been rewarded. We're reminded by now that he's in retirement, Buffett's adage that the cash flows are king. Ultimately, we should always look to the cash flows of companies, and of course, the tariff news impacts long-term cash flows. But I guess what I've seen with this latest deal that's announced, I think the administration has made it very, very clear that, contrary to some early thinking, because early on people thought that the reason why tariffs were being raised is that, okay, we're going to put in tariffs and we're going to cut taxes, and that tariffs are going to be means to government revenue. It's evident that that's not the case, but actually the announcement of tariffs was basically a fairly aggressive way to kick off a renegotiation of trade terms with all of U.S. trading partners. And so I think in that context, I'm fairly confident that there's at very least a lot of concern for market reaction. And there's a concern to make sure that deals that are ultimately struck are not going to be disastrous for the U.S. economy, at least in the long run. So I think, does volatility continue? Probably. Should it negatively impact your view on U.S. companies? Not necessarily. I think where we kind of land on that.
Right, and talking about a disaster for the economies there, do you think the worst case trade scenarios, you think that they're not going to come to pass, with these talks we've seen so far?
Yeah, exactly, Lottie. I think what we've really seen with both this settlement, but frankly, I think the moment that the administration announced that they were pausing all tariffs except China, when they made this announcement sometime back, where they said, okay, listen, everybody who's come to the table, we're now going to pause the tariffs and give adequate time in order to actually set the right terms in place. I think, to me, that was a really big shift in the tone and the market perception. I mean, the U.S. equities are up for the month. I think you'll probably see a continued rally today. Oil prices are more or less flat after a period of decline, because I think folks are beginning to realize, okay, wait a second, this is not like a real nightmare tariff situation. Rather, the bold announcement was used as leverage to negotiate terms. And I think, the reason that has implications on volatility is because I think the market has entered a very reacting character at the moment. And so for that reason, I think it's hard to tell what a bottom looks like or where we'll end up in the next 6 months. But I think long run, economically, it seems clear that the administration is not going to make, at least on the tariff front, any totally radical changes. It just seems like it's used to kick off negotiations and settle somewhere reasonable.
Right, and looking at most of the markets in this month, we've seen the U.S. Stocks. They've recovered quite a lot. With most of the conversations we're hearing from the U.S. and China, we've seen Bitcoin that's hit a new it's not a high, but a high not seen in a while. Hitting about $104,000, and all of that, riding on optimism we're seeing, coming out from these conversations. But we know that adage, sell in May and go away. Is it not going to happen this May?
Look, honestly, trying to predict the next couple months is so hard. I think even if my full-time job were just monitoring and doing some AI sentiment analysis of what different people have said in different speeches, I don't think you'd get a very accurate prediction about where things are going to end up in the next couple months. And I honestly, I think that if anything, the current market cycle is proving to folks that, look, like, you're not going to be rewarded for trying to trade on the news. And I don't think that's ever been the case, to be honest. I don't think that's ever been a great way to invest or make money. I think the best investors will look through the current noise, try and understand that net, you probably end up with a slightly lower tax regime. Net, you probably end up with slightly higher tariffs. Net, inflation may be marginally higher. But I don't know. I think, to me, where it looks right now is that, if anything, the results are probably going to be a lot more moderate than we thought 1 month back.
All right, we'll definitely keep tracking. Maybe this might be a stay in May kind of month or year. But thank you so much. Always great having you. A very good friend, Isaac Marshall, investor
Pleasure.
at TLG Capital. Thank you for coming on today.
Take care, man. Always enjoy, Lottie. Thank you.
Fantastic. All right, so that's Business Morning today. That's how the local markets we track and the economy is looking. I will definitely give you an update at 1 p.m. on what's playing out with most of the markets that we track. I'll be back for that. Now, we know we have John McQuarrie. She's in Abidjan, and she'll be covering the Africa CEO Forum 2025 right there. She'll give us updates on what's playing out. Thank you for watching. I'm Ladi Williams. Bye for now.